This is the Friday, March 6th, 2015 version of the Market Plus segment. Joining us now is Naomi Blohm. Naomi, welcome back.
Thank you.
Now, we've got a couple questions here to start us off from Twitter. Phil in Ontario, Canada is curious, how low can beans go?
Bean prices probably in the short term. We will see the old crop and the new crop price, unfortunately, get all the way down towards that $9 level. There is going to be really good support at that price point, though, and I think that that'll hold for the time being, and then we get our little bit of a spring bounce because we have to get through how many acres do we really have and what's the weather going to be doing, and then just to see how things are faring in the rest of the world at that time. So, longer term, though, the bears out there say $8, and you could understand why they're saying that technically and fundamentally, but that wouldn't be something that I don't feel would happen unless it's a perfect growing season, and then that doesn't happen until harvest. So
now, that being said, should folks looking at new crop beans, should we look to lock some sales in today, or do you wait until after we hit 9 and try to get a bounce back up past where we're at today?
Well, I think I would get started if you haven't done anything now, because it's fair value overall. And if we do get down to those lower levels, the USDA reports coming up can give us a lot of surprises. So if you lock it in, I would say wait, though, and then re-own it on paper. Depending on your risk style, you could just go along with futures. There's just buying a call or some other call option strategies that would be of service to you. But then how high we come back and bounce this spring or this summer, obviously just dependent on the weather and then all of the math that goes with it. So have me back in a little while and we can take another look at it.
Certainly. I mean, really, it's going to be that planting intentions report that should help shape this thing in the short term.
Yeah, because then we can start plugging in all the numbers as far as demand and yield and all of those types of things. And even on the report coming up next week on Tuesday, they're expecting to see the ending stocks cut already a little bit because of our export demand still being so strong. So that's encouraging, but that in and of itself isn't going to be enough to get the market to rally because they're already pricing in this drop. So if it comes out as they're expecting, then, yay for the picture of, our beans being in demand, but still just that global glut of supply is killing us right now.
Ending stocks on this Tuesday report would have to come in much, much lower to have an impact.
Right.
I mean, is there a possibility that if they decide not to adjust the ending stocks, which in March they've been known to not change a whole lot in the March reports, that would be a fairly bearish factor.
That would be bad. Yeah, if they just leave it unchanged or only tweak it just even a small amount, then that would really send the markets quickly lower. Right?
Is it worth putting some short-term protection in place before that Tuesday report, just in case?
Yeah, we actually were looking at buying puts in the short term already this week, and I think I would definitely look to do that on Monday. There's some nice, you could do something with the short-dated options. You could use just a May put just to have something in place and not be spending a lot of money out of pocket. It would be a really good idea.
Because it does seem like that's the market with the risk potential on the row crop side today.
Yes, it has the most to lose yet going forward.
All right. Now let's jump down into the cotton market. We saw almost a $2 drop over this last week. Are we done buying acres in the cotton market?
I don't know, because the guys down south are telling us a lot of different things. The thing about the south, and this is what's going to be exciting on the March 31st report, Mike, sorghum. Because the cotton guys down south are telling us that they're going to be doing sorghum instead of cotton, or sorghum instead of some of the other more traditional things. That sorghum market, I'm telling you, that's the one we got to keep an eye on, and I got to learn more about it. But for as far as cotton goes in the short term, we had a nice little bit of a push higher, and then now we had the setback this past week. And the setback came because there were cancellations to China for export sales, and so that just sucked the life out of the market. And so now we're going to go back into this sideways pattern. But China also, in that same breath, of course, you know how they are, then said that they're going to be issuing their import quotas, and so that made all of their people in China happy, because that way they could be importing our fresh cotton versus that nasty stuff sitting in the storage bins over in China. So that'll keep the demand doors open for the exports, but it isn't anything that's going to send the Chinese just coming to buy in huge quantities again, because they have so much domestically there, and our dollar is still so strong.
You bet. Now, you mentioned something interesting with the sorghum market, and I've heard similar things. I've been to Kansas and out west, and there's a lot of excitement in that market. And it's my understanding that that's been driven by China purchasing U.S. sorghum because they don't want to buy corn.
Right.
But now you mentioned on the program they've bought some Ukrainian corn. Yeah, is that going to, do you think, put a damper on this sorghum market? Could we see basis start to slip if now they're okay buying corn, even if it's not from us?
No, I think that they've built a strong demand market for sorghum. The people in the Sorghum Association have done a phenomenal job of just promoting their products. So I think that that's going to be a constant demand that's there. It's just that China would need to buy corn anyway, and they're still snubbing us. That's all it is. So now Ukraine is their friend for the week.
Okay. Now, we've heard a lot about China not buying U.S. corn. That was an issue last year, and then they went ahead and approved all U.S. corn and DDGs back for repurchase, but that's still been a big issue, lawsuits and everything. Is that going to have an impact on this market, on buyer sentiment, do you think, going forward?
I think it's a little bit of wait and see. So what you're referring to is the issue with the Syngenta trait.
Yep, the MIR 162.
Right. And so that, of course, such a big deal with the marketplace where, it made the market push lower when we got the news that the loads of corn were rejected and that they found it in the DDGs. And just when we had the momentum going with people thinking that China was going to really starting to be importing from us, that was just the big piece of news that made everything fall apart. And we did lose some business because of that happening. Some feel that maybe the market lost anywhere from 11 to 30 cents because of it. And there's still, you have to do a lot of studies to see what the true implications would be. But that whole Syngenta thing going forward this month is a pretty big deal. On the 13th, that's when there's going to be kind of like all of the lawsuits that are out there are going to be kind of put together, and they're going to be going to federal court. So that's the next big step coming up. And then at the end of the month, that's when Syngenta has to present all of their data from previous litigations and all of their findings from what they had with the USDA and anything that they said that they were doing with China. So it's going to be a long and drawn out process, but the market is really just trying to figure out, had it not happened, where would our corn price be potentially? Or how much exports did we really lose because of it? So this whole month, that Syngenta thing is going to be a very important topic to be watching. They have obviously introduced that trait now that they'll import it, but like we were saying, we're not like the cool game in town for the short term because they're going to just go buy from Ukraine or wherever it's cheaper.
Sure.
So maybe had that door been open, they would be more willing to be buying from us. A lot of things to be mindful of going forward.
You bet. And I think from the Syngenta side of the table, just for to look at that side, they'd say, we were wrong place, wrong time. China was looking for an excuse to not buy corn, and they stepped into it. So it will have to play out over these next couple months.
Right, and they're trying to make it into not just an issue of the traits, but an issue of global interactions and, China versus U.S. and trade. And so there's a lot of components that are coming into us. And so a lot of fact finding still needs to, I think, occur. And like I said, it'll be something to really be watching this whole month.
All right. Well, Naomi, thank you so much for taking the time to be with us this week.
Yes, you're welcome.
And thanks to you for all of your questions via Facebook and Twitter. Please continue to check it out. And Naomi Blohm is newly on Twitter at Naomi Blohm, I believe.
Right.
So look up Naomi and be sure to ask her your questions over there. Thanks for watching and have a great weekend.